We've added a lot of cost to this industry over the last couple of years in the form of non-feed variable costs, fixed costs. Everything really has gotten much more expensive, and those are rather sticky costs. So once you see those increase, they don't tend to come down, or they don't tend to come down as fast.
Welcome to the Rumination Podcast presented by Jefo Nutrition. I'm your host, Dr. Greg Eckerle. Today I'm pleased to receive Dr. Schulz to discuss the economic situation within the cattle market. Dr. Schulz is an associate professor in the Department of Economics at Iowa State University and serves as a statewide extension specialist on livestock economics and markets. Lee grew up on a diversified crop and livestock farm in central Wisconsin with a bachelor's degree in agricultural business from the University of Wisconsin, River Falls, a master's in agricultural economics from Michigan State University, and a PhD in agricultural economics from Kansas State University. Lee regularly collaborates with Farm Management Extension, the Iowa Beef Center, and Pork Industry Center, the Center for Agricultural and Rural Development, and industry stakeholders. He publishes regularly in professional journals, extension publications, and popular press, and has spoken at numerous professional and agricultural conferences. Lee has been recognized by the Agricultural and Applied Economics Association and Iowa State University for Early Achievement in Extension and Outreach Programming, and received the 2023 Dean Lee R. Comer Award for Excellence in Applied Research from the College of Agricultural and Life Sciences at Iowa State University. Welcome to the show, Lee. How are you today?
Thank you, Dr. Eckerle. It's great to be with you. I'm a proud alma mater of Kansas State University, similar to you, Greg. So glad to share that in common.
Yeah. It's always nice when the purple gets back together, right? And so on today's episode, we're going to delve into the economy, and we're looking at it as we're coming into the 2023 crop year. When we see where we're at with the cattle cycle and crop, mainly with the cattle cycle, where do you think the next 3 to 5 years of production are going to go in overall pounds of production as we push these animals larger? Are we getting framier? And what's going to happen when we look at exports and imports?
Sure. So, I think where we're currently at, we're getting a lot of attention with the cattle inventory cycle. Just to give a bit of background, the cattle inventory cycle has 3 phases. It has expansion, has liquidation, and has a turnaround phase. We're currently in the liquidation phase. Our inventory, this cattle cycle started in 2014. Inventories peaked in 2019, and we've been on a slide of inventories the last several years. Most cattle cycles are 9 to 14 years, and so if you do the math, we're in year 9 of that cattle inventory cycle. This one's going to be on the longer end of traditional cattle cycles. I like to highlight as an economist here, we spend a lot of time looking at prices, looking at profits of producers, and it's really important to keep in mind that producers respond to profits and not prices. So while we've continued to see prices increase, we haven't seen profits really respond quite yet because producers are dealing with really high cost of production. And so that has lagged this cattle cycle a little bit longer, maybe than when we've seen it in shorter cattle cycles. I also kind of remind us that with the biology of the cattle industry, it's going to take a long time to expand. So let's just think about a heifer that was born in the spring of 2022. So last year, she was weaned last fall. If she's going to enter the cow herd, she's going to be bred this summer, right? Her first calf is going to be the spring of 2024. She'll wean her first calf in fall of 2024. And if it's a bull calf and it's going to go to the slaughter market or a heifer calf, the first time we're going to see beef production from her is 2025. And so if you look at where we were in 2022, we're not really adding numbers to the cow herd, right? We're not adding replacement heifers. We're looking at really tightening up that beef supply for the next several years. Maybe not really starting to rebuild the nation's cow herd till 2025. And so that says, we're pushing off beef production into 26, 27 in tight supplies. As I look at some forecasts of production here in the next 2 years, in 2023 and 2024, in aggregate, we could reduce beef production by 12%. We haven't done that in a lot of years, that 2-year reduction. And so, we're going to really tighten these supplies considerably over time, at least over the next couple of years. Now, I'll highlight, you mentioned about beef pounds. Now, we've seen a flattening of the cattle cycle over time. Part of that's due to we've had larger cattle weights, right? So you don't need as number of animals to have an impact on beef production in expansion or contraction. And so we've, over the last, here this year, last couple of years, we've offset those decline in cattle numbers somewhat with larger weights. You can't do that forever. Obviously, as we've seen a large contractionary phase, that offset in weights is not keeping up with that, obviously.
Yeah, no, that totally makes sense. And we can only push these animals so far when it comes to the weight game and everything like that from a overall just genetic standpoint. Like, I mean,
well, and I'll interject too. Is so certainly, there is the, the genetic part of it and how far we can push them, but the cost of production matters a lot too. So when we look at compared to 2020, feeding costs of gains have increased over 50%. So, there's not a lot of incentive to add additional weight to cattle. Certainly, and when we look at the tightness of cattle supplies, we're really pulling cattle ahead. Cattle prices are really strong. Basis levels are really strong right now. So there's a lot of incentive to market those cattle and take the basis.
Right. No, yeah, that makes sense. And then part of that, when we look at demand globally for U.S. beef and exports, and we had that BSC case in Brazil. And so have we seen any change in the way that our beef are being marketed, or what's the in comparison to the domestic market supply?
Yeah, so we like to break out demand both domestic and on the export market. I'll note demand has been incredible the last several years. If you look at it internationally or domestically, it has taken a bit of a step back this year. Really, the last couple of years, you're comparing to a really high base level when you think about demand. So even though we've taken a bit of a step back, we still remain historically in a really good demand spot. And prices reflect that along with the tighter supplies. As we look at beef exports, in April, they were down 10% compared to last year's levels. By volume, a little bit higher, 18% by value. But we're really comparing to a really high base last year. So again, we're still historically pretty strong when we look at that. A lot of this is due to tighter supplies, right? So when you look at just the volume we have to export, it's lower than last year because we're having tighter supplies. As a percent of production, it's still roughly where we have been historically. So that's a good metric to say, demand remains really strong as a percent of our production. And so, when you think about our potential for export, I like to rely on 10-year projections by USDA and the Food Ag Policy Research Institute out of Missouri. They say from 2024 to 2032. So if you think 2024 may be the low or some of the low in that beef supply, they show potential for export growth of 15 to 20%. Over that time period. That's by volume. Value could even be potentially higher as we're marketing very high-end cuts on the export market. And so there is certainly room for growth there, but there's challenges as we think about short-term, global economic conditions are certainly a headwind. The strong U.S. dollar, even though, it maybe has cooled a little bit here in 2023, remain relatively strong headwinds to exports.
Awesome. Yeah, that's good news for the cattle producer when we're looking at putting our product out. And then when we think about it, though, when we look at the domestic market and we see things happening domestically here, interest rates are on the rise, things that are affecting the American household, what would we see at the retail side for perspective as we see these retail costs climbing in the American household or even the Canadian household and their expendable income being shrunk down? And when it comes to comparing, what meat choice are they going to put on the table from a price perspective?
Well, I do need to commend you. You sound like an economist there, Greg. And because I think you highlight really the issue with demand. It's not prices. So the price of beef does not impact demand, right? It impacts quantity demanded, but it doesn't impact demand. What we know impacts demand, one big factor, is income, right? And as we've seen the last several years, we pumped a lot of money into this economy in the form of disposable income, right? And so really you've seen the tail of that over the last several years of ability and willingness to purchase beef. And right, that has really spurred demand. Well, we've seen that considerably take a bit of a step back here as interest rates have increased. Inflation levels still remain relatively high. And so there is where we're starting to see this impact on beef demand. I want to highlight too, it's not just beef, right? If you look across the protein complex, we're seeing all proteins take a bit step back in demand. So that's something we're notably watching going forward, right? Is how we continue to monitor that demand. I will highlight that the Federal Reserve had decided not to raise interest rates after they have for 10 straight meetings. That they're going to pause a little bit and see how the economy is shaping up. So I think that's important to see. Maybe we're getting to a steady spot here, and if we can hold this level of demand, that's still pretty notable historically.
Yeah, and just for frame of reference, we're recording this on June 16th, and so we're talking about that jump in June, and then with that, we have two major summer holidays packed in from here, and where we're going to probably see this come out with July 4th, and then I always get Labor Day and Memorial Day mixed up. It's going to be Labor Day holiday, and so those are historically great holidays for U.S. protein market when we have summer barbecue season and things like that. Have you looked at that impacting demand this year, or is it going to remain relatively flat?
Well, I think you can look at the value of wholesale. The choice beef cutout for this time of year is record high. I think that points to, yes, we have tighter supplies, but you need the demand to pull it as well. And so I think you're seeing very strong demand, in within the wholesale and retail level, that is really spurring prices. So I'll note we started June with record cattle prices hit 190. You don't get that without very strong demand, right? And so I think it is really important to highlight it's not a tight supply situation. The fundamentals there are a little bit maybe easier to understand. We know that much tighter supplies will increase prices, but the importance of demand, I think, maybe gets a little bit forgotten and is certainly showing why that strong demand is really supporting prices.
Yeah, that makes sense. And as we shift gears and we look at where we're going to be sitting come fall, and looking at the 2023 crop report and how we're sitting and where that's going to go, and the old adage is cheap corn makes cheap cattle. Where can we be looking at for kind of like forecasting, or just kind of where with the thing? I know Iowa's been a little dry this year, and so we had a little bit maybe later plantings. We're not getting crops to where they need to go moisture wise, so they're growth has been a little stunted if we look at the report. We got the acres in, but what are we going to be looking at in the fall? Best case scenario with moisture, and then maybe worst case scenario if we maintain a drought consistency pattern.
Sure, and that's really a key question as we look at crop markets and for cattle markets. The feed situation. As you mentioned, we're mid-June here, so planting is nearly complete. So now we're really focused on the crop development and conditions, which is going to impact that new crop supply here come fall. So we can look at USDA's crop progress reports to look at how this crop is shaping up. If you look at the report for week ending June 12th, 61 of the nation's crop was rated good to excellent. That's 3 percentage points lower than last year, right? So for benchmarking against last year, the crop isn't as good this time of year, slightly below. It's also slightly below the 5-year average as well. So I think to your point, we're still dealing with drought conditions. A lot of the country that had been in extreme drought has gotten some moisture, but we're still dealing with certainly dry weather. Iowa would be a case. We were much better last year than we were this year for this particular time. Soybean markets in very similar situation, 59% was good to excellent, 3 percentage points below a year ago levels. You're seeing from a demand standpoint, right now we're kind of looking at exports. Early signals are, they're kind of tracking maybe a little bit with year ago levels. I think there's a little bit of concern. There may be some weakness on that demand front, and that could provide a bit of weakness. So when I look at prices, both old crop and then going to new crop prices, we're really seeing a step down potentially. So we're in a much weaker spot than we were, a year ago or in really the last couple of years. From a feed standpoint, that's very supportive, right? As we look at the cattle market. But I always like to remind folks, we have a whole growing season in front of us, right? There's a lot that has to go right and a lot that can go wrong that could impact this year's crop. Now, importantly, I think what the crop markets is reflecting is, this could be a relatively large crop. We got a lot of acres, right? So, we could see a bit below trend line yields, but if those acres come to fruition, that should give us a pretty large crop there. And so, that's what the markets are reflecting right now. But, there is some opportunity as we look at the feed markets come fall, I think to maybe put a little bit of a price ceiling on some of those.
Yeah, definitely. And that's always the big question is what's summertime moisture going to look like? Where are we going to hit with severe weather events? I know we just had a couple here in North Texas and Oklahoma that really, really affected us last night. And so it's just one of those where nature is going to do what nature does. It's hard to forecast the forecast, and so that's one of those careers that everybody's like, if I was anything, meteorologist, right?
You can sometimes put economists in that career bucket, right?
So. Yeah. So it's one of those where it's nice that you're like, okay, we're totally guessing, but it's one of those where educated guesses are always good. And so as we're looking at that, and then we're looking at certain areas of adding value into the market spectrum, we've seen an emergence of the local farmer bringing product to the consumer direct. Are we seeing any of those value-added programs coming on a larger scale, or is this really grassroots market going to take place from an economic standpoint and really add value to these producers that may not realize it in traditional methods?
Yeah, I think there's roles for all types of production practices, and really it's about finding that demand, right, and meeting that market opportunity. When you asked about this question, the first thing that came to mind was we have a new cattle contracts library. So USDA rolled this cattle contracts library out late January of this year. This was a part of the Consolidated Appropriations Act of 2022. So they directed AMS to develop this pilot program. And we've been learning a lot, I think, about, price discovery and the ways in which cattle are marketed. And, I find it really interesting when you look at some of the contract specifications for those various contracts. And so, you look at for some type of quality designation, your 90% of your contracts have a quality designation. So those are choice USDA grades typically. You have about 85% have weight. But then you can get into some of these other ones when you think about like supply relationships. So I think that's where we're maybe talking about some of the possible emerging programs. There it's only about 4 to 5% of the contracts. It could be more or less of the cattle. We don't know that by looking at the cattle contracts library. There's branded products. So not branded cattle, branded products here, but that's roughly 46% of the contracts there have some type of brand designation for them. So I think, we've really developed a very diversified portfolio when you think about market programs. And this cattle contracts library provides a little bit of transparency there when you think about that. As economists, I'd be remiss if I didn't, remind us that there's a lot of a cost benefit about a lot of these programs, right? So we know that there's what the benefit is. It's the premium paid, right? Understanding though that, that premium needs to exist likely over a longer period for producers to really pay off. But the cost side of it is there's likely a higher cost of production and doing business that way. That doesn't mean that this isn't a value proposition, that the benefits outweigh the cost, but for each individual producer, that's going to be a decision they need to make, right? As you think about where we're going in the cattle cycle, very tight cattle supplies, pounds are going to be really important here. Now, that doesn't mean that, attributes of that beef aren't very critical either, but pounds are really critical as we think about where we are as far as tight supplies, where we're going over the next couple of years.
Yeah. And as we're mentioning that liquidation process again, and then back to Mother Nature doing her thing, I mean, I know Texas, we're still dry. I mean, we've been getting rain, but large doses at one time really don't fill the soil back moisture components back up. So can we have an expectation to see cow kill numbers increase, stay the same, or because we're still in liquidation, I don't expect them to decrease, especially as we maintain drought. So what kind of is forecasted in the cow kill numbers?
Yeah, I'm glad you asked this question because I think there's a couple of key ways to really look at this data. So as you look at beef cow slaughter year to date, we're down about 12% compared to year ago levels for the same period. That's almost 200,000 beef cows over that period. This comes after last year we were up 11%, right? Almost about 400,000 beef cows. Now you look at that and say, well, we're killing a lot fewer beef cows this year. It must mean we may be seeing that turnaround phase, right? But I'll remind us that we have a lot fewer cows than we did last year, right? Because we culled quite a few. We didn't bring that many heifers back in. So if you look at the 52-week culling rate, 2022 was the highest ever in the history of the data, which goes back to 1986 for us. We culled 13.4% of the national herd. We'd never done 13% before. The highest was actually 2011, where we did 12.5%. So if you look at this year so far, through 21 weeks of data, we've culled 4.9% of the herd. It's the second highest ever, only to last year. So I would contend that we're not through this contractionary liquidation phase yet. As we're seeing, yes, we're seeing cull cow numbers down, but we're still seeing the culling rate continue very high. Part of it's, I think, as you mentioned, places are still dealing with drought. And in certain areas, that's dictating a lot of those marketing decisions. But we're also seeing historically high cull cow values. So there's a real value opportunity there for producers that may not have the forage available to market those cull cows into an extremely high market. I looked at prices here for the first week of June, and it was 116, 117 per hundredweight for cull cows. I mean, you look at last year, it was just above 80, right? So we thought last year's prices were exceptional, right? So think about that opportunity for some producers to market those cows.
Right. And yeah, I mean, those are great prices on the cull cow side. And so as we look at that though, and we look at these cow placements, as how I'm going to refer to them into the market, when do we think we could see a rebound, or do we have a potential for a contraction / integration within some of the marketing or producers basis, where we have some producers potentially, because they don't have the liquidation capital to refund, age is going to play into this as well, to exit the market, or are we going to see other entities step up and get larger and expand?
Yep. So, I think on your first point, I've been on the record of saying I don't think we're going to see meaningful expansion until 2025. And nothing really in the conditions has changed that for me. I will note that the profit situation has escalated notably, and the projections we have, really the run on prices here the last 5 weeks or so, I think has really made us a little bit more optimistic about this fall and even next year. So, that may spur a little bit more expansion, but I think we're not going to see that meaningful expansion in the cow herd until 2025. Now, when you think about a possible restructuring of the industry, we're all waiting for the Census of Agriculture data to come out in February 2024. It's going to give us what the situation was in 2022. So I think that'll be very valuable to understand, not only cattle numbers, but operation level numbers, right? So how have we changed in the number of operations? Interest rates are certainly impacting investment in the industry, or ability to invest in the industry, right? As you look at interest rates are the highest since 2006. That's going to be, a bit of a headwind to expansion or just investment, or, getting involved in the industry. The one thing I'll highlight, and we've done a bit of work on this, is we've been talking about the age cliff forever, right? As producers are getting older and older, older producers own most of the equity in the industry, right? We've been talking about it forever, but that transition continues to take place. So I'm very confident, that will continue to take place within the industry. but are we in store for a little bit of restructuring, concentration taking place? I think the data, if we look at historically, the census data would suggest that, that operations are getting larger. We are seeing some of the, some exiting in the industry.
Yeah, no, yeah. That makes sense as others have found value in careers outside of agriculture, family structures, and then the way we've grown. Yeah, that totally would make sense and track. So in conclusion, I guess the overall evaluation of the U.S. marketplace and everything seems to be on the upswing and a good forecast. And then what would be some of the main challenges coming within the next 12 to 18 months?
Yeah, I think, really the big challenge for me is costs. I think when you look at, it's not only feed costs, as we talked about the crop market situation and potential for a lot lower prices, or at least lower prices as we get into the fall. That doesn't mean that our cost of gains and dollars per cow are going to decrease all that much. I think they will decrease, but we've added a lot of cost to this industry over the last couple of years, in the form of non-feed variable costs, fixed costs. Everything really has gotten much more expensive, and those are rather sticky costs. So once you see those increase, they don't tend to come down, or they don't tend to come down as fast. So I think costs remain a big headwind. Demand is something we need to continue to monitor, because I remind people all the time that demand is going to really dictate how fast and how hard and how large we can push these prices higher, right? So, I think that's really highlighted here. I think we've seen pretty strong demand. That's allowed us to have a really longer spring rally, maybe than we have historically, right? And so I think there's the potential for supporting this market throughout the year. Question I got actually yesterday was, where do we see prices even going for the rest of the year, right? And I'll remind our listeners that actually the last 2 years, the highest prices we've seen were at the end of the year. That's not typically the case. Usually seasonally prices are the highest in the spring. So there's a lot of optimism out there, but there's a lot of risk because of a lot of expensive costs, right? So when you think of the cost of calves, feeder cattle, those need to dictate some risk management decisions, because while there's a lot of opportunity, there's a lot of time to get to that calf market this fall, right? Or to get to the yearling market next spring. And what I'm going to start to pay for replacement females are going to be very high cost, right? And so I would encourage, listeners, producers to, maybe look at investment in replacement females or cows maybe earlier than they typically would, because I think right now, I think they're pretty competitive. I don't want to say they're undervalued, but I think relative to where they could be going, I think they would be a pretty valuable investment right now.
Right. Most definitely. And so with that, I'd like to thank you for being here with us today. And then I'd also want to thank our audience for joining us. And don't forget to subscribe to the Rumination podcast on Spotify, Apple Podcasts, YouTube, and other platforms. Feel free to visit jefo.ca for more information. This podcast was brought to you by Jefo Nutrition, precision nutrition for a growing world. Have a great day.